Sometimes, but not often, farmers can be lucky. They can get a good crop and that coincides with good prices. This year, cotton growers have not just been lucky, they've hit the jackpot. Winter and spring rains have left perfect planting conditions and a record crop will bump into a record price. Earlier, I spoke with David Bone, Communications Manager for Cotton Australia.
Likely to be a very good year for us, Kerry. I think we're going to see a bumper crop. It's been a long time since we've gone to this sort of numbers. We expect to see about 3.5 million bales produced this year. But the rare thing is it's a double header. So we've had the good seasonal conditions plus the international prices have gone up. We've had either before, but not always at the same time. So it's looking pretty good for us.
So, David, what might that price be?
We've seen prices this week just tipping over $1 a pound in US dollars, that is, and it's pretty rare that we've seen that happen. Once in the Civil War, once back in the 1990s, and once again now.
That's David Bone from Cotton Australia. Of course, much of the cotton being planted at present will already have been sold on the New York Board of Trade. Last week the price yo-yoed on daily limits, but finished the week close to $1.16 a pound. Cotton has been edging up since about March, but the real spike came after the big floods in China, late August, early September. Here's the price movement since early last year, from just above 40 cents in March 2009. As David Bone just mentioned, for just the third time in history, the price is now well over $1 a pound. I know local growers like to use bales as their reference. With 500 pounds in a bale, that price is the equivalent of about $580 a bale. Moving on, and the Bears were on top in Chicago as favourable weather pointed to better corn and wheat crops. Soybeans were the exception, with international demand underpinning a further price spike. So corn and wheat fell, and as fast as America can harvest its soy crop, China wants it on a ship pronto. That price is 30% up on a year ago. Local prices have softened somewhat. The East Coast concern is now on the continuing La Niña conditions. A lot of wheat in central Queensland has been downgraded, and with more rain forecast for the coming week, fears are high that a lot of Downs wheat and NSW wheat could also be shot. The spot price for wheat drifted $9 and sorghum was also down. Canola followed the overseas trend and went up $10. ASX futures were so-so and ended down a fraction. One analyst is describing WA wheat as the most expensive wheat in the world. Now to our livestock, and the National Livestock Reporting Service says weather is the major factor influencing cattle markets at present. This past week it was heavy rain in the south which disrupted stock movements. Most categories slipped. There's a lot of angst about the dollar, and the only positive note was provided by feeder steers, which lifted 6 cents a kilo. And this left the Eastern Young Cattle Indicator firm at $3.66 a kilo. Live exports continue to struggle against the weight limits and a lack of permits. Prices steady. They've been the same for several weeks, and again, no market for cows or those cattle in excess of 350 kilos. So where do those big cows and Mickey bulls go at present? They're heading south, courtesy of a ride with one of Australia's biggest stock hauliers, RTA. I spoke earlier with RTA executive Brooke Hartley.
Kerry, we're fairly busy lately. We've got a late burst, even though there's been early rain about. We've got ships in Broome, Wyndham, a few in Darwin over the weekend, probably 3, with permits permitting. And also still a few cattle going into Queensland, the heavier types that can't go to Indo.
So, Brooke, you're still shifting plenty of cattle south?
Yeah, there's been cattle go out of the Kimberleys to meatworks in Perth, the heavier types, and also a lot have gone into South Australia, some on adjustment in the top end of South Australia, and also to the meatworks at Murray Bridge and quite a few to Warrnambool.
Brooke, that sounds an expensive business. Give me a quote, Kimberley to Perth.
Oh, you're looking around that just under $200 a head, Kerry.
That's Brooke Hartley from RTA. There are rumours around Darwin of some permits emerging next week, but they are just rumours. Moving on to sheep meat, and the rain stopped the downward trend for lambs. Mutton dipped again, although the restocker activity remains very strong. The lamb indicator lifted 6 cents. And pigs had their best week for a while. Processors are looking to secure Christmas supplies, and demand at a wholesale and retail level is steady. And dairy prices are firm. Like most agribusinesses which export, there's a struggle with the dollar, but those prices are holding up reasonably well. Back to New York now for sugar, where prices have bounced around as various reports emerged from China, India and Brazil. The China influence is Typhoon Maggie. So sugar closed up again, a touch under 28.5 cents a pound, Reports are also emerging about some water damage to the Australian crop and the subsequent loss of sugar content. Now to wool, where it was another week of strong demand. Gains were achieved across the microns, with a feature being the ongoing influence of European buyers, although as usual, China was again dominant. The AWEX Eastern Market Indicator closed at 928 cents a kilo, a rise of more than 2%. And before I finish, a quick mention of rice. The Spanish company Ebro wants to buy Australia's Sunrice company. The offer is more than $600 million, and it appears a done deal. Rice lifted on the Chicago Exchange last week to close above $14 a hundredweight. Again, the concern is Typhoon Meggy, as it bears down on China, the world's biggest rice producer. And that's the Landline check on prices.